Heard your mate's got something going through his accounts that you don't? Well, let's have a chat. As business accountants, my team and I spend all day long helping business owners on their journey. And one of the most common discussions we have over the past 16 years odd is talking with clients and prospects and people who reach out to us asking for advice who've already got accountants. They want to know, look, I've heard this is going through my friend or my colleague's business. Why is it not going through mine? Am I missing out? Is there a tax deduction there? What's the deal? And it's very, very common. And I wanted to chat about it. I thought we'd make a great video actually, because we get so many comments and questions on YouTube looking at, can I do this? Can I do that? And as I say, in our everyday business, that I realized we hadn't actually talked about this particular subject. We probably have on the podcast or somewhere else, but actually on video, probably not. So let's have a little chat about it, I suppose, rather than anything else. And that's this issue. So you've heard that your friend or your business colleague's putting through these costs. You're thinking, why am I not? Well, there's a few key reasons this can be. And from our experience, there's a couple of key themes. One is they're not really telling you the truth. And they don't necessarily mean they're being deliberately like that. But what can happen quite often, especially traditionally, is in the old days, you'd take a carrier bag with all your stuff in that you thought you were going to claim and bung it to your accountant. The accountant would then produce all the forms and give it back to you to sign. And of course, you're seeing summaries of all the different things that are being claimed. And sometimes in a sole trader tax return, you might only see 2 boxes that say total income, total costs. So in reality, they don't necessarily know what is in there. And it was very common. I mean, we used to do it. People would put all sorts in there. You'd be like, well, unfortunately, you can't have that because of the tax law, and you just disregard it. But you'd always rather have more stuff given to you than less. There's nothing worse than having to go back to a client and say, real sorry, we think you're missing some stuff. Can you give us X, Y, and Z? Because it's more hassle for them. We have to put it down, pick it up. So you'd always rather that was the case. So historically, I think that was far more common. And when we saw people, when you sort of broke that down and then we saw people come on board with us, say, and we looked at what they'd been claiming and things like that, it never quite tells the same story. So there is that. I think sometimes, whether they know it or not, your mate or your business colleague is probably not telling you entirely the truth quite often. As I say, not necessarily deliberate. There can be deliberate reasons, obviously, but normally it's a misunderstanding there. So that's the key one. Now, it's changed slightly these days because you have technology. So if you're in cloud technology, they've got a much more of a higher chance of actually clicking on the categories and seeing what's being claimed where. So there is that as well. Although same reason, some accountants won't reflect the accounts and the software. So if you're one of these business owners that keeps their own books on, say, Xero or QuickBooks, something like that, and you give it to your accountant, you might find your accountant still disallowing some things when they type up the accounts. Now, us as a business, I always love that Xero or QuickBooks file to reflect what the accounts say, so they match, right? There might be a few adjustments in categories, but ultimately the overall picture should be identical. But not all accountants work that way. Some will just strip the data out, do their own thing over here, and then not touch yours. So you can have this similar situation. So that's kind of number one. The second reason that can occur is a lot of the time in your specific situation, it doesn't make sense to do what they're doing. So you hear some clients, they'll be like, my friend's doing this. And you'll be like, well, in your situation and the way you have your money divided between you and your other half and everything else, it's much more tax efficient for you not to do that. So there is that as well. It might just be in their situation it makes sense, in yours it doesn't. And I'd love to give you some examples of that, but I don't have many that I can think of where it's just very straightforward and applicable. But you see it in things like sometimes people will license a room in their house in their limited company to the limited company. And that's quite an effective way quite often of offsetting some home costs. But in many situations, it's not worth the paperwork. It's not worth the hassle of doing it and having to do rental accounts and all these other things. But in other circumstances, it's 100% the right thing to do. So again, you don't know their exact situation and everything else. But what I would say, and when we get to the end, I'll give you a little sort of caveat and tip around that. But do, of course, raise these things with your accountant and talk about it. But I think the main thing is that instant thought shouldn't be, I'm missing out. It should be investigative. That's probably not a word, but curious. Try and find out, like with your accountant, where is this a thing? Because quite often it is a thing. So using limited companies as an example, you could pretty much put anything you want for a limited company. And quite often we say yes, but. So yeah, you could, but I wouldn't do it because actually there's a benefit in kind on doing that, or that's a tax consequence, or there's a tax consequence to doing this and things like that. So do investigate that. So you might find that in their situation it's fine, in your situation it just doesn't make sense, although you could do it. Now, of course, there is the other option, and that is that actually, in the grand scheme of things, they're doing it wrong. And this is very common. Now, it's common for two reasons. One, let's say you're a sole trader doing your own tax return, Now, you can put whatever you want on the form. Ultimately, it's self-assessment. So, and actually, the same still applies with a limited company. It's still self-assessment. You've still got somebody filling the form out for you that ultimately you as the owner are signing to say is correct and being submitted. Now, the defence normally comes, well, I've been doing this for years and the tax people have never had an issue. Well, that doesn't mean it's right. And quite often, it just means that they haven't investigated you. And there's certainly a feeling over the years that they target certain sectors and sometimes they don't target others, and sometimes there's more pressure on investigations than there are for other years. And we've got lots of resources being put to bounce back loans and furlough investigations at the minute, so we're not seeing currently as many individual ones. So people are probably right in saying, well, I haven't been investigated. That's probably correct, but it doesn't mean that they're accepting that your return is 100% correct. So, and actually they have got the ability to go back quite a few years if they figure out at one point that it's wrong, and if they think you've actually been corrupt, they can go back, as far as they can go, really. So bear that in mind. So that isn't a defence. The less obvious one, which I want to talk about because it's a sad state of affairs given my profession, but the other one is they might say, my accountant says. And they, again, may not be telling you an untruth. That might be exactly what their accountant's saying. The problem is the accountant can be wrong. So you can see there's 22,000 pages behind me of tax law. And ultimately, something that's deductible in your company is really one line in that tax law. It just says it needs to be wholly and exclusively is kind of the key phrase. Now, backed up with that is thousands of pages of revenue manuals and years of tax court cases. Now, unless you're a super geek and you like following all this stuff and you keep up and everything else, you may not know it's changed. So your accountant may be giving you outdated advice. That is very possible. There's also this thing that is very not widely known, and that is that accountancy is unregulated. So whilst there are many accountants, and probably I'd say the majority of accountants, who are part of professional bodies, that means they've had to do some qualifications, and there's different types of bodies and all these kind of things. But ultimately, once you're part of a professional body, so for example, if any of my team do anything wrong, there's comeback. You can go to the professional body and say they did something wrong. They can get fined, struck off, investigated, all the rest of it. However, you don't have to have any qualifications to call yourself an accountant, because it's quite a generic term in the UK, and set up in business on your own, helping business owners or personal tax people, whatever the case may be, 0 qualifications. So as a result, what you don't know is the quality of the information you're getting. And I think that's where we see a lot of contact here, is that people will see our content and reach out and say, can we have a second opinion? And that can be done, but quite often, a lot of the time, their accountant's correct, but there are the odd ones where it's just, in our opinion, wrong for some reason. But it is a debate. Like, tax isn't black and white. There's a rule book, but the rule book is an opinion. So I think we did a video a few videos back, and I think we did a podcast recently on hair, personal care, Botox, makeup, all these things. Now, you could have 4 accountants in the room and they'll have a debate with you over what could and couldn't be in certain situations, because it is very opinion based. So bear that in mind as well. So you might want to have that debate with your accountant and chat through if you've got any issues. And of course, you can go through and you can Google and find some information, but do be wary. And the irony of this, as I'm a dude on the internet talking to you, is not lost on me, but do be careful of information you get on the internet, because, for example, there's a couple of key sites, I won't mention the names, but there's a couple of key sites out there that have got wrong information, and Google's SEO bit has linked them to the top. So when you Google that question, you get the answer from one of these expert blogs, and the answer's wrong. And I see there's one particular one where people hit me up in Instagram DM quite often, like, yes, it's wrong. It's definitely wrong, but it's on their website. So you have to be a bit careful with that, but do seek out the professional advice and have the debate with your advisor if you're not sure and you've researched it yourself, because there isn't really anywhere to hide. There is the internet. But what you probably won't know, and this happens quite a lot, is someone would say, I've Googled it and I've read on this forum that this is being done. And then you're like, yeah, but that was 6 months ago and there's been a court case in the last 3 weeks and that's put that out. So for example, business travel is a big one. Pre-COVID, that probably changed quite substantially in, say, like a 4-year period, might change 3 times. Like, it was really, really big. So it moves at such a pace that it might be outdated advice, or what you're reading online can be outdated. But as I say, it's a mixture of these things normally, a mixture of untruths deliberately or not deliberately from your colleague who's telling you this. There's the fact that it might be worth it in their situation, not worth it in yours. And of course it can be that actually their accountant has told them that, and it's not quite right, or it's not quite up to date, or they've just got a different opinion to somebody else, and that's also quite normal. It's quite a debatable thing, and that's why we have all these tax court cases, is because it really isn't as crystal clear as you think it would be. So there you go. So if you're not getting, if you feel like you're not getting everything that you should be in terms of put through your accounts, there's plenty of reasons why it's just worth having an open discussion with your accountant. And if you're doing your own tax return and thinking, am I doing everything? That's where it's definitely worth seeking out advice. But if it sounds wrong, quite often it is. So we also get approached by quite a few clients per year who have got advisors and they're like, I'm being told I can do all this stuff, but it just doesn't sit right with me, and I've done my own Googling and I can't see that's right. And sometimes it's like, well, it's not right. They're just being very aggressive or probably over the line of it. So if it feels wrong, quite often that's a sign that it's worth chatting to somebody else. So there we go. There's some thoughts for you on why you may or may not be allowed to put stuff through. And that works obviously for you as well. You might find that you're putting things through that your colleagues aren't, and that's because you're getting great advice and your accountant knows something their accountant doesn't, for example. Does happen. So there we go. Please share this with anybody that you think needs to know, and I'll see you in the next one.